Today, we're talking DeFi 2.0, how DAOs are really changing the world, why you should be paying attention to these trends, and how this is making a lot of investors very, very wealthy. It all comes down to the incentives, and when we're looking at financial incentives, it's pretty hard to beat 7,000 APY, especially when this is backed by a treasury reserve asset. That's kind of the whole model around these DAOs, and this is just one use case. Throughout this video, I won't just be showing you the economic use cases, kind of this more speculative thing in the financial space with ridiculously high annual percentage rates. And this is just on Olympus DAO, which is kind of the top dog. Then we see these other versions, like this one on Avalanche Snowbank, which is very, very risky, but crazy APY at 551,000 APY, absolutely insane. But I'll basically be breaking this down in a very, very simple to understand version, how you can understand, what's going around with DAOs, why they're changing a lot of these different spaces. And one great example before we get into the details here with Olympus that I did want to show you is right here. This is a great podcast, talking with one of the guys at Constitution DAO that Laura Shin had on her Unchained podcast. I listened to this yesterday in the car. Very, very interesting. He talks about, how they were essentially able to crowdfund capital together to make a bid on a legitimate auction for the U.S. Constitution. I mean, this is insane in my opinion. $41 million bid, even though they did not actually win this is just proving the use case, right? So then the even more interesting thing is, it's not like they all bid that number and then it was locked up and then to get their money back. No. Since it's via smart contracts, all the investors are able to also get their money back if they don't win the bid. So you can think about this like anything at auction, right? So think about if there is a DAO created for a house auction, a land auction, a farm auction, all these different things, and having decision making spread out instead of one single point of failure, which we're going to get to in a second, when we look at things like Olympus DAO and how other things have popped us up around this. And I'll actually be sharing with you 3 other interesting projects that are similar to Snowbank, where if you want to play around with this, it's insanely high reward, but also very, very high risk. So you always have to do your own research. There's always a video for that link down below in the description. You have to make sure you're going through doing your due diligence on any of these things. It's not investment advice. I'm simply showing you these trends early because I think this is truly going to affect tons of other spaces around the world. It's not just going to affect the financial markets, but when you use this model of democratized voting, right? So this idea of governance in the blockchain world, when you're essentially able to tokenize something, it can actually improve so many systems. We can see this happen so many ways. And the best case of this, this is a good example, right? But what's going on right now with billions and billions of dollars is over on Olympus DAO. We can see this since it's actually a reserve currency protocol. That's the idea, is having a crypto native kind of reserve currency, which is quite interesting. Basically taking the same idea from central banks where they have reserve treasuries, right? So they have treasury assets that back the overall currency. That's what's interesting here. So for example, when we're looking at this, the total value deposited today, so the total value deposited overall, this is the mark today, is $2.4 billion, pretty insane. Market value of treasury assets is $717 million today. And again, if you understand fractional reserve banking, if you understand how this system works overall with banks normally, how they basically make the arbitrage, banks make profit. Look at any town you're in around the world. It really doesn't matter. I know I kind of have a global audience because I've made videos when I'm traveling around, but anywhere around the world, banks own the really prime real estate. And how do they do this? Everybody's like, wait a second, I use the bank services for free. Well, what you have to know about that is they lend out your assets. I have many other videos on this. I'm not going to go in super detail with this, but essentially what you can understand from this is, let's say you go to the bank and deposit $100. It's not like they're taking that $100 and putting it in the bank. They actually lend that out. So they actually earn a percent off of that. They pay you a tiny fraction of that percentage, and that's their profit there, right? So they basically make money off interest rates there, and that's called leverage. You leverage up. The US is very, very over leveraged. I've talked about this in a lot of videos. But when you have this, and most people don't know how the system works, basically then you can take a model and put it in the blockchain world. So you can take this model of kind of reserve banking, fractional reserve banking, and then put it in the crypto space and basically create your own version of that actually helps out the users and cuts out the middleman. So it cuts out, think about all the property values that all these banks own, all the wealthy CEOs of these banks, and it's basically giving it back to the users. That's kind of the idea here, and it is a very, very big experiment. It's very, very new, so you have to understand what you're doing, but I'm basically trying to make this video as simple as possible, break it down in as simple as possible language. So if you have any questions after this video, you you can always reach us down below in the comments, or join the Telegram group, which is linked down below in the description, or tweet us at investglobal_IO, because I'll basically be explaining all these things, and I'm happy to make another video on this, but I think it's very, very interesting, again, to identify these trends and then really see how they work. So now to kind of get into the nitty gritty of it, essentially what we can see here is the percentage stake. So this whole thing is based kind of on game theory, right? So you can't build a new system where you're giving everyone rights to a token that's gonna increase this amount in staked, you're gonna have this APY without having some interesting model and kind of interesting economic game theory built around this. And the way they do this is bonding and staking. So these are two different mechanisms. So bonding is essentially where you deposit assets. You basically give assets to the treasury. So the DAO owns the treasury. So the Olympus DAO, decentralized autonomous organization, owns this treasury, just like a bank would have its own treasury, right? A central bank would have its own treasury that have the reserved assets backed up in it. So when we're looking at this is the actual treasury, right? So we're seeing the market value of the treasury assets. And with these treasury assets, since everything here with OHM is reserved, essentially you would be able to give out this APY for 307.5 days, which is insane. So when you're looking at something like a rug pull happening, when you're comparing this with something like Iron Finance, it's two different models. And that's why I find what Olympus is doing quite interesting. Now, again, these other ones that are popping up, it's a little bit more controversial on how they're running this. But just to break this down so I'm not confusing you guys, essentially all this comes from is OHM pegs the value to the treasury assets, right? So essentially what you can do with this is have an algorithmic based stablecoin. And that's kind of the idea here. OHM is not the stablecoin, but that's kind of the idea around this reserve asset is it's algorithmic based. So if the actual value of OHM increases, they will actually burn the token. So like if it kind of gets out of balance, it's basically a burn and buyback model, right? So based on whichever one, you can use the different mechanism and it either burns or buys it back based on the kind of an input and output. You can see kind of that if you understand code. But again, I'm trying to break this down really, really simple. I'm trying not to get too kind of in the weeds, but I'm happy to make another video on this if you guys are a bit confused. I apologize if it wasn't as clear of an explanation. It is a bit of a complex topic, but again, returning to the actual use case here is this idea behind, when you have this reserve currency based system with central banks versus with a decentralized autonomous organization, you have two different systems, because with a decentralized autonomous organization, decision making, governance, everything that you go about doing to make strategic decisions, really what it comes down to, is democratized. So instead of having one person's ego, one person's single point of failure where maybe they had a bad day and they're going to make a rash decision, instead of that model, now you have it decentralized, right? So you have a decentralized model of doing this, and it's very, very interesting because you can make much more precise, intuitive decisions based on everyone's perspective, kind of the hive mind versus the one person. So with this, like I said, Snowbank is another version over here. So you can see the annual percentage APY right here is 551,000%. Total value locked in is $46 million. Pretty insane. So they basically have a similar model. I was talking about this with Constitution DAO. All have this. I mean, you guys can find this article. I won't link to this. I've always, in my videos in the past, I always link articles down below in the description, but I'm giving a lot of other people free, a lot of other like blogs and article places like free SEO. So I think I'm going to stop doing that. But you guys can find this article. Anyways, beyond this is what I was talking about with the Constitution DAO. So like if anyone had participated in this, you can essentially get your money back there. And this is just one use case. You can see them. You can follow them on Twitter at Olympus DAO. This is our Twitter at investglobal_IO. Beyond this, you can see the OHM token right at $481, down close to 12%. And again, the interesting thing here with the OHM token, what you have to understand is once you buy in, essentially that you get a piece of the pie. So there's the increased supply in the OHM token, which is what they control since they own the liquidity, since they have the treasury backed assets, really comes down to you knowing that, okay, if you buy this and if you stake it, you will actually always have that same piece of pie. So it's not like it's devaluing you like it devalues your currency, right? So in the traditional banking system, as the money supply increases, your money is being devalued. Versus in this system, it's a bit different if you understand how it works, because they own the liquidity. And as they actually increase that supply of the OHM token, you actually get paid out. That's the whole model. That's how you have this crazy high APY. So you don't really necessarily care about the actual project's price based in US dollars. You more care about the treasury and the kind of continual growth of the network. Now, like I said, there's many risks involved with this. Make sure you know what you're doing. Just some other versions of this. So Wonderland Time is kind of similar. I talked about Snowbank here. Be very, very careful with all these guys. We also have things like Metaverse Pro. I'm pretty sure this is based on Binance. Yeah, so this is a similar type model where it's ridiculously high APY. We can go to their app and probably see this. Let's see. So let's see about their stake. Yeah, ridiculously high APY at 581%. Then we go into things like this. We can see their Twitter. I'll give them a follow. Oops, there we go. And then beyond this, we have things like, I think Hector's on Phantom, if I remember right. This one is relatively well established. That's kind of impressive, their market cap there. This is one that I might make a detailed video on. If you guys want to see a specific video on anything that I talk about throughout this, where it goes more into detail and it's not just kind of this beginner explanation of how DAOs work, DeFi 2.0, why this trend is so important and why you should be paying attention to it, then I'm happy to do that, right? So if you want to see a detailed video on Hector DAO like I used to do on the channel, I'd be happy to make that. You can see all their official sites here, then Hector DAO at Twitter. That's basically all for this video. If you guys have any questions, any comments, let me know down below in the comment section or on Telegram. You can reach out to us on Twitter as well at investglobal_IO. The site is investglobal.io. If you want one-on-one help, consultation, anything like that, visit the site. You can schedule a call there, or there's an email down below in the description. That's all for this video. If you enjoyed it, like the video, subscribe to the channel, stay up to date, hit the notification bell, and click all. Invest Global, and until next time.